UK feels a bit trussed up at the moment with potential new government, autocratic government, tax raises on capital and income and inheritances for UK tax residents and expats living and working abroad. So we're considering that, and to get more information, follow us at the Living and Working Abroad show and PartPartnership.com. But let's first of all consider what happened 2 years ago. Liz Truss came in and for whatever reason introduced a budget that failed miserably. The inconvenient fact was that some of the information surrounding that was actually incorrect. It was the Bank of England that sold 40 billion worth of gilts the day before that budget that undermined the markets. So was it in fact the incompetent career civil servant Andrew Bailey heading up in the Bank of England that caused the problem and then covered up to keep his job? Or was it other parts of the civil service that were working with the Conservatives at the time, like Sue Gray, head of the civil service, or the Office of Budget Responsibility, which made false claims at the time about the potential deficit that budget would create? Now that was an alternative style of government and approach, one that's not been followed over the last 15 years, one that's manifestly failed, because it was about supply side, it's about low taxes. And where we are now, knowing that the last 15 years has failed, the UK are now looking forward to increasing taxes going forward as a way to mend the economy, to raise taxes, to invest taxpayers' money in buying up private companies, to create stable investment and capital for the future. Whether the money comes from private funds or government funds is one way or another, but a government running the country in a centrally controlled autocratic way is a different way to the low tax UK of the past. It's what we've potentially got here, and potentially the thing to consider going forward. If you take a broader look at the history of the Labour government and what they did was they introduced capital gains taxes in 1964. Before that, there were no capital gains taxes. That was introduced in 1964. It's about to be ratcheted up. What we saw in 2002, well, certainly between the year 1999 and 2002, the Tony Blair government, Tony Blair, Gordon Brown, they decided to sell off the UK's gold reserves. Now, they decided that was a good idea at the time. It raised question marks. It was supported by the Bank of England. So that's what they did. So they sold off 12.7 billion tons of gold. They sold a lot, 32,000 ounces of gold, a lot of gold, and a lot of revenue that was raised. So what they did was that they raised 3.5 billion of gold, but if they'd actually kept that gold and not sold it to generate that 3.5 billion of revenue to fund the expansion that the Labour government wanted to do in the early 2000s under the new Labour approach, if they had generated that 3.5 billion then from those gold sales, that gold capital today would be worth, and you can't make this up, 22 billion. It would be 22 billion of assets that the British government would have, instead of a £20 billion deficit that they want to tax you, the taxpayer, for to fill the gap. So it's quite an interesting scenario that who created the black hole? Was it the 14 years of Conservative government, or was it the gold sell-off from before, or was it the disincentive for capital investment with introducing a capital gains tax in 1964? So it's a big change over the last 60 years, and 2024 with the Halloween budget is going to make another big change going forward as well. In a pursuit of net zero, it gives big corporations the opportunity to invest in things to try and cut out global warming, replace the trees that would otherwise shade the land, reduce the carbon dioxide. They'd rather introduce other measures to cover fields with solar panels and the like to cut carbon emissions. So this is what we're going to see going forward as the new way of the new economy for the 21st century. It'd be radically different from the past, but it's definitely generated from centralised autocratic decisions and spending rather than supply side economics, which could have led to faster economic growth, more investment and lower taxes and better living standards for taxpayers in the economy. To protect your family, your business, your investments and your property from tax creep going forward, contact us at privatepartnership.com.